the central banks have been buying for some time. The Asians have been buying for some time. And really, liquidity in Western capital markets has been reduced right down. On top of that, of course, the way in which Western capital markets work is they have become a lot more efficient in terms of the use of credit relative to the amount of bullion that they need to hold to back up the mountain of credit. So, this generally develops into an accident waiting to happen. And this is why I think the stands for delivery, or stand for deliveries on Comex are actually an important part.
Yeah.
What's happening. I mean, you will see, you can see a chart of how, Comex warehouse stocks have risen. They've risen very sharply recently. They've gone back up pretty much to the levels that we saw in 2020 when we had the last panic. After 2020, when the panic subsided, the stuff started running out of the warehouses. So where did it go? Don't know, really.
Right.
Some of it might have gone back to London. I don't know. But stocks went way down. They'll go way down again. But I'd think that what we're looking at is gold, which is going out of the system. And the replenishment, of course, is mine supply. Who are the two largest miners? China, Russia.
Right.
Australia is pretty big too. I mean, it's sort of more or less level pegging with Russia, but Russia is taking, I think, taking over the number 2 slot.
Wow.
Anything else out of the Asian continent, places like Kazakhstan and so on and so forth, I think goes straight back in, if not in Kazakhstan, to neighboring countries. The amount of free gold available to the West actually is not all that great.
Yeah.
You've got central banks are still buying. I mean, central banks are, they sort of instinctively understand the risk in credit, which is why they're increasing the quantity of gold in their reserves. What they're doing is they're increasing the quantity of real money and decreasing the quantity of fake money, in other words, currencies. That's all they're doing. And, this is the basis of the whole argument. The difference between real money, which in common law is gold. I mean, it was silver, but silver's not priced as money anymore. And currencies, which are just purely credit.
Yeah.
Depend on the fact in the issuer.
Do you see that slowing down at all, central bank buy-in, or do you see that only accelerating?
I see no reason for it to slow down. I can see every reason why it would accelerate, because as I think more and more people understand, the risk is in credit, not in a high gold price. Then under those circumstances, I think you're just going to get more and more buyers for the available physical stock, which basically is not coming our way. I mean, a lot of it is already spoken. And I'm sure, I don't know, we don't know who's standing for delivery on Comex. As I say, I suspect it's Globex dealing. I wouldn't be surprised if central banks are using this as a source, because where else can they go? I mean, did they go to London? There isn't the liquidity there. Do they go to somewhere like the refiners? The refiners will say, well, join the queue. Might get something to you in the next 6 months, which is not good enough. So if you actually want some fiscal bullion, I'm talking about a ton or two, you really got to go to Comex. Retail market is, there's lots and lots of liquidity in the retail market. We're talking about big volume where typically people buy less than $100,000 worth of gold at a time. But, if you're talking about a ton or two, then, really, you got nowhere else to go other than stand for delivery on Comex.
Yeah. Well, I guess what's the end game here then is, like, with central banks buying gold, are they see it like, I guess what I'm trying to say, are they trying to restructure their economies around gold then? Or is that's what is happening? Or is it just out of just sheer what they see happening coming in the future, which is just a lot of destruction of credit.
Yeah. Well, I think they see they see the latter. They see the destruction of credit. It's interesting. I would say that Russia will be quite happy, or has been quite happy, to put the ruble on a gold standard, and it's very much in her interest, because the moment she puts it on a gold standard, I mean, gold would just flood into Russia because of her interest rates. It's the interest rate differential. What we've seen Comex do to reserves in London, a Russian gold standard would do to the rest of the world, sucking in gold from everywhere, where the yield on gold is less than, say, 15%. So it would allow the Russians to reduce their interest rates quite significantly, because they would manage the gold reserves. They wouldn't try and use interest rates to manage the economy. That's the key. So I think they've been in a position where this really would work. And this, I think, was behind their attempt to get a gold-backed currency on the BRICS agenda ahead of the Johannesburg meeting in 2023. So, but that was ruled out by India in particular, who A, hadn't gotten enough gold themselves, and B, they're basically Keynesians, and they've been educated by the Bank of England in how to manage their affairs, if you like. So, and the other thing is that China takes a view that she lets everybody else make mistakes. She doesn't want to be accused, if you like, of destabilizing the Western financial system, which I think is sensible and makes, is completely understandable. So I think where China is, China has very substantial hidden reserves. I reckon that that's probably over 30,000 tons. I think also that if you look at the withdrawals from the Shanghai Gold Exchange vaulting system, the people, in terms of jewelry and small bars and coin and so on, have got around about another 26,000 tons.
Gosh, that's a lot of gold.
Oh, it is. But I mean, a lot of people too. I mean,
true.
It's so there's that. And I think the other thing is, which we don't see, is the amount of gold owned by banks and so on and so forth, which is still within the SGE vaults. The reason for this is that most banks will offer a gold account as well as a current account, particularly with the reduction in interest rates in China. It makes having a gold account a lot more attractive for households.
Yeah.
Now, the reason I mentioned households is that household savings are 35% of GDP. 35%. So we're looking at $2 to $3 trillion every year, needing to find a home. In the past, it went into unoccupied property.
Yeah,
that bubble has gone. You've got the stock market, and that's had a very checkered history as far as households are concerned. The only other thing you have is bank deposits, and the banks have tried to enhance the return in order to attract these funds, keep them on their balance sheets, by giving them special rates, as long as you locked up for 3 years or something like that, So that's the way in which they've done it. But the reduction in interest rates in China recently has made that unattractive. So consequently, I think more and more funds are going into these bank gold accounts. Now, the banks don't actually have the gold, if you like, in their own vaults, because the way the Shanghai Gold Exchange works is that anything that's taken out of their vaults is then scrapped going back in. So you leave it in the vault. That's what happens. So I think they're huge quantities of gold owned by the banks to back their gold liabilities to households sitting there. So, I mean, the amount of gold over there is just simply unimaginable. And it explains why there is such a shortage of the real stuff in the West, particularly when, we reckon that the way in which you gain exposure to gold is you go and buy an ETF, or you can buy a mine or whatever. And in any event, it's so unfashionable we'd rather have NVIDIA. So
Yeah.
there's a, we're not in the same game. We really are not.
Yeah. So I guess I'll leave this. This is my last question then is how does this really end? Is it just a shifting of uh, power, e- economic power from the West to the East, if you would? Is that how this is the end game? Or, yeah, what's your thesis on?
Mm. Yeah, that's basically what's happening. And it's already changed a lot more than people realize. This is the whole point about BRICS and the Shanghai Cooperation Organization. China now exports more to the BRICS than she does to America.
Wow.
So we
Wow.
think,
That's a
we
lot.
think, we think that America is, China is dependent on America.